to the crowd. My name is Sherwood Neese. It seems the excitement with the new rules by the SEC implemented on March 15th are beginning to settle down. The Online Investment Index was down for the second straight week. The index dropped 146 points, or 27.4% over the prior week, and dropped below the trend line. We anticipated this, as there appears to have been a rush to register new offerings leading up to the SEC rule changes on March 15th. You can see in the following chart that shows active issuers over time, it peaked in March with 719 active offerings. More offerings have closed than new ones that have come online, so the number of active campaigns is currently down 9% over its peak of 654. That being said, the number of active offerings is up 51% over the previous April, when there were only 433 active offerings. So that's 221 more companies this April sinking funds online than the prior one. The media coverage of the SEC rules is increasing, which we believe will bring more awareness to the industry and continue to bring more offerings and investors online looking for capital. Quarter one has been a great quarter all around for the industry. If we look at the top five online investment platforms by dollar volume, we can see that WeFunder has seen a 1,538% growth in investments from 3.4 million to a whopping 55.9 million. Net Capital has seen a 790% increase in growth from $795,000 to 7.1 million. Republic has seen a 375% increase from 6 million to 28.8. Start Engine, 140% increase from 11 to 27 million, and Seed Invest, a 133% increase from 2.6 million to 6 million. We think that speaks impressively to the growth that each of these platforms is going through right now in terms of the number of offerings and investors coming online. Now, if we look at the top 5 industries by dollar volume, it looks a little different. Software saw a 3,436% increase from only $639,000 in the first quarter of last year to $22.6 million in the first quarter of this year. This was led by really 3 companies that took 43% of that total $22 million that was raised. One is a virtual reality office space called Immersed, and they raised $6.6 million. Second is a company that forecasts earthquakes called Precursor, and they raised $2.1 million. And third is Flash Technologies, a company that predicts lightning, and they raised over $1 million. I think it's fascinating that the last 2 are in this sort of Earth space, and it shows you the diverse interest that investors have in funding these ideas across many different industries. Specialty Finance did see a 1,092% increase from 1.9 million to 22.6 million. Household and Personal Products saw a 678% increase from 1.4 million to 10.6 million. Diversified Media saw a 506% increase from 2.2 million to 13.2 million. And Restaurants saw a 23% increase from 3.6 million to 4.4. Again, for restaurants who are struggling right now, we think this is a very positive sign that investors keep on coming in and pouring money into these offerings. Finally, if we look at which states have been the biggest benefactors between last year and this year in quarter one, we've got Florida with a 1,671% increase from $569,000 to $10.1 million, followed by Utah with a 1,223% increase from $518,000 to $6.9 million. Arizona with a 644% increase from $269,000 to $2 million. Texas with a 586% increase from $3 million to $24 million. California, 493% increase from $8.5 million to $50.3 million. And Colorado, my home state, with a 433% increase from $677,000 to $3.6 million. I think it's important to point out that several of these states, as you notice, were in the thousands, the hundreds of thousands last year, and this year are all in the millions of dollars. We think this trend is going to continue for the states as well. That's all for now. My name is Sherwood Neese. Thanks for taking your time to spend with us at The Crowd.